Hello everyone, thanks for joining our session today. My name is Andy Flury, I'm founder and CEO at AlgoTrader. Our flagship product WIRESWARM is a digital asset connectivity, trading and execution platform for sell-side institutions like banks and brokers. Today I will be talking about the unified digital asset trading lifecycle for banks, how this would look in an ideal world, and what is already possible today. Just as a reminder, if you have questions, please type those into the chat panel and we'll try to answer them right away. So let's start by having a look at the crypto market crash 2 weeks ago, where $1 trillion worth of crypto assets got liquidated. Exchange APIs were overloaded and orders didn't get executed. If you didn't have multiple venues to execute on, your orders would not go through. If you trade with credit lines, what happens if you exceed your credit limits and you don't have alternative venues to execute on? If you have assets deposited on exchanges, but the exchange API becomes unresponsive, how do you move your funds to a different venue without significant delay and network cost if chains are super congested? As a bank, not being able to ensure best execution at all times results in a massive reputation risk, especially during such mass liquidation events. But how do you get around these issues? Well, in short, the answer is diversified execution and settlement connectivity. This will save your reputation beyond such mass liquidation events. But what exactly does it mean? Simply put, best execution in the context of digital asset banking means the ability to buy or sell at the best possible price available in the market at the lowest possible cost and risk. However, achieving best execution comes with a compromise. Let me explain. When markets are calm, exchange APIs are responsive and blockchains perform on a nominal level. Banks have an incentive to execute client orders on exchanges like Coinbase, Kraken, or Bitfinex because these offer the lowest fees. This way, banks can realize a profit from commissions while being able to ensure they can achieve the best price for their clients. But banks have to accept certain counterparty and operational risks because trading through exchanges means transferring assets between their own custody and the exchange's hot wallets. On the other hand, when the market is experiencing extreme volatility and massive trading volumes because everyone wants to get out of the market at the same time, banks can only achieve best execution if they can ensure that client orders still get executed as requested. In such situations, banks tend to use brokers or OTC desks that offer credit lines. With these types of venues, banks typically don't have a counterparty risk, but they have to accept a certain premium on the spread or higher trading fees. As you can see, best execution can mean different things depending on the situation. At AlgoTrader, we believe that true best execution should be possible at any time, independent of market conditions or whether only a few clients want to trade or all of them at the same time. To make this possible, banks need to have multiple counterparties available to trade with. But they also need to make sure that counterparty risk is mitigated as much as possible. So in an ideal world, your digital asset banking system has the following 6 characteristics. It offers market-wide connectivity. It allows you to minimize operational risk, execution risk, counterparty risk, and liquidity cost. And last but not least, it provides you with full execution privacy. Let's then look at these 6 characteristics in detail. Number 1, market-wide connectivity. Broad connectivity to multiple exchanges, brokers, and OTC desks is necessary to ensure you have an available execution venue at all times. Diversification is key because it will ensure you get the best price available in the market, and it gives you alternatives when individual venues become unavailable for whatever reason. The challenge is that exchange APIs are not standardized, and many exchanges are still unregulated. If banks cannot or don't want to source liquidity from multiple venues and instead limit themselves to a single broker or OTC desk, they will not be able to achieve best execution. Number 2, minimize operation risk. You want to keep the entire pre-trade, trade, and post-trade process as automated as possible. The biggest potential reputational damage and financial loss arises from human failure, such as fat finger trades or wrongful handling of deposit and withdrawal addresses. Automating the entire trading and settlement lifecycle also reduces your headcount and operational overhead. The key challenge is that manual order execution and asset transfers to and from exchanges create significant operational risk. As a consequence, banks are challenged by excessive manual overhead and operational risk as long as pre-trade, trade, post-trade, and post-trade processes are not fully automated. Number 3, minimize execution risk. You want to make sure that client orders are executed as fast as possible. Any delay means market timing risk. Ideally, you would want to fund your exchange accounts just before a trade to minimize the exposure of your assets on the wallets you don't have custody of. Also, you want to ensure that you're getting the best possible price available in the market, and this is why you need to be able to source liquidity from multiple venues at the same time. You achieve this by using a smart order router. Finally, you need to ensure that large orders don't move the market price and that other market participants can't front-run your trades. To get around this, you need to split up large orders through execution algorithms such as TWAP, VWAP, Iceberg, or Sniper. Number 4, minimize counterparty risk. One of the biggest entry barriers that prevent banks from benefiting from low-fee exchanges is the associated counterparty risk, as mentioned earlier. Whenever you want to execute an order on an exchange, you are required to pre-fund the exchange account and lose custody to those assets, as long as they are staying on the exchange's hot wallet. Not your keys, not your coins, as we all know. In an ideal world, you hold full custody over all your funds up to the very moment your order gets submitted to the exchange. Currently, the problem is market timing risk and network fees associated with transferring funds on-chain prior to executing an order. The only current alternatives are OTC desks, which often require minimum monthly trading volume, or brokers who offer credit lines but are usually very expensive. Number 5, minimize liquidity cost. To benefit from best execution on multiple exchanges, each exchange account has to be pre-funded. The amount of assets locked in exchange accounts therefore increases with each additional venue you use. Apart from the resulting multiplied counterparty risk, this also significantly increases the cost of liquidity. In an ideal world, this multiplication of locked liquidity in exchange-owned hot wallets is kept to a minimum through using a centralized self-custodial liquidity pool, which can be used to dynamically allocate the required funds to the respective venue as part of the automated trade execution logic. Number 6, execution privacy. As all blockchain transactions are public, it's quite probable that large on-chain transfers to exchanges are being front-run by other market participants, as these on-chain transactions get propagated publicly through the blockchain. Ideally, it should be possible for institutions to privately fund a trade off-chain before executing an order. Only the post-trade settlement should be done on-chain. In order to overcome these 6 challenges, banks absolutely need streamlined, secure, and private execution and settlement connectivity to a large range of counterparties such as OTC desks, brokers, and exchanges. As the recent mass liquidation event has shown, relying on a single or just a few trading venues can become a serious issue, and banks should work on continuously extending market connectivity to ensure they can always select the venue needed to ensure best execution for their client orders at all times. But at the same time, banks need also to make sure that the settlement workflow with those counterparties are designed in a way that minimizes risk and costs. Only then banks can offer competitive digital asset services. But why is best execution such a huge challenge in digital asset trading as opposed to the FX market? Well, unlike FX, crypto trading infrastructure was initially retail-driven, while institutionalization has only really just started. The crypto space is a 24/7 global market with still immature trading infrastructure. And in addition, liquidity is extremely fragmented across hundreds of exchanges, brokers, and OTC desks. Hence, order books can dry up quickly, which further increases volatility. The key to true best execution is therefore to overcome this fragmentation of liquidity and technology on a market-wide level. And this is exactly why I'm standing here in front of you. So what's the solution? The solution to overcome liquidity fragmentation is the defragmentation of technology. In order for banks to achieve best execution, they must stop thinking in technological silos. Instead, they have to look at different technological components in an integrated manner. Looking again at these challenges, we believe the key to a successful digital asset banking is an integrated approach that unifies the entire trade lifecycle with a fully integrated technology stack, including order and execution management, custody, and settlement. All of it connected to your core banking system as a single solution. And this is why AlgoTrader collaborates with custody and settlement solution providers such as Fireblocks and Metaco. By working together and connecting the best technology components on the market, we can unify and automate the entire trading lifecycle in order to meet all the ideal world criteria banks are asking for. Together with Fireblocks, we're currently rolling out an initial integration which includes automated on-exchange balance checks, automated best execution with smart order routing and execution algos, automated exchange deposits and withdrawals, and automated reconciliation with core banking systems. Let's have a look how this solution works in practice. A bank client enters an order to buy 1 Bitcoin through the e-banking app, which gets routed to WIRESWARM's order and execution management. WIRESWARM automatically checks whether the bank's exchange account, in this example the FTX exchange, has sufficient balance to execute the order. At this time, an automated transfer of $40,000 is initiated onto the exchange account through the instant fiat transfer network, such as those offered by Silvergate and Signature Bank. As soon as the exchange account is sufficiently funded, WIRESWARM sends the 1 Bitcoin buy order to the exchange. The exchange sends a confirmation back to WIRESWARM once the order is fully executed. WIRESWARM then automatically initiates a withdrawal of the 1 Bitcoin from the exchange account to the bank's Fireblocks vault. The 1 Bitcoin is now being withdrawn from the exchange account to the Fireblocks vault through an on-chain transfer. Once the transfer arrives in the Fireblocks vault, it automatically reconciles the balance change with the core banking system. Now, as you probably noticed, this WIRESWARM Fireblocks integration 1.0 does not yet fulfill all 6 ideal world criteria discussed earlier. It still exposes the banks to counterparty risks as they still have to hold funds on exchange-owned hot wallets. Asset transfers for trade funding are still also performed pre-trade and on-chain, although in an automated way. And this is why Fireblocks and WIRESWARM are already working on the integration 2.0, which will be the first fully integrated solution on the market, successfully enabling banks to achieve direct market access while enjoying the lowest possible counterparty risks, liquidity costs, and complete execution privacy. Last but not least, a few words about us. AlgoTrader is a Switzerland-based fintech software provider. As we talked about it, our product WIRESWARM is the leading order and execution management system for digital assets. We support both agency and principal trading through components like smart order routing and execution algos. We provide connectivity to 25 plus of the largest, most regulated crypto trading venues through a unified fixed API connection. We provide full support for spot, options, futures, and perpetual swaps at this time. So far, we've been able to onboard over 120 global clients. We're a team of 30 people with offices in Zurich, New York, and Singapore. And we're backed by investors like Credit Suisse, FinLab, Blockchain Valley Ventures, and Worth Capital. And by the way, this is what the WIRESWARM dashboard looks like. It gives you access to all relevant items, such as charting, order books, open orders, as well as on and off exchange balances. In addition to the trading dashboard, the entire platform functionality is also available through a standardized fixed API. So that's it for me today. If you'd like to learn more about AlgoTrader and WIRESWARM, please get in touch with us. Thanks for joining me today.